Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes! So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy.
Yeah.
Like, we drive like...
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed the most? Who is more spoiled?
Oh, yeah. It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at Tastylive.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Oh, yeah, it's Wednesday, November 20th.
It begins early.
A little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for The Price of Truth, a little podcast where we like to explore the incentives that govern our world. Oh, man. Today's Wednesday, everybody. You know what that means. We have the one, the only, the esteemed, the global head of macro here. One of the greatest guys I know. I'm talking, of course, Ilya Spivak. Ilya, how you doing, my friend?
A little bit less sickly today than I was yesterday, but my God, this back-to-school wave is killing everything in sight.
It's everybody, bro. You killed me coming into the show. I hope you don't mind. I'm going to say it publicly. You were talking with our producer about working out. And something hit me as you were saying that. As you were talking about working out, I didn't see Ilya like on a bench or in a squat rack or deadlifting. I immediately saw one of my high school wrestling coaches who had like a Russian accent, and the guy would wear head to toe gray sweatsuit every day, and he would work out with like a leather medicine ball. There was never a weight involved. It was always just motion and movement with a medicine ball for whatever reason. When you talk about exercising, I go, I don't think you work out. I don't think you squat or bench. I think you're a medicine ball guy. And
I'm a calisthenics guy all the way. It's all lunges and push-ups, and I do them religiously, and pull-ups and all that, but no weights, all body weight.
I was 100% accurate.
100%.
I nailed it. Shout out to everybody.
Down to the sweatsuit, though. Mine's not gray, and it's got a hood.
Yeah, like I feel like yours has got a brand on it. You know what I mean? Maybe it's velour, it's made of nice material. Whereas this guy, he was just all grit. You know what I mean? His sweatsuit was made out of grit and nothing else.
That's right. I mean, I feel like any self-respecting Russian needs to have an Adidas sweatsuit. Otherwise, what are you even doing out here?
I mean, why is that? Is that what they teach you guys, like in school and like your PE or your gym class? Are you guys doing the Like, is that why all of you work out that way?
It's the prison cell workout for everybody.
All right. Hopefully, I didn't offend anybody out there. I'm just having a good time with I'm just having a good time with my friend here.
As a representative of Eastern Europe on the show, I've got you covered.
All right, man. Shout out to everybody watching on tastylive.com as well as Tasty Trade desktop and mobile applications. If you don't already have them, go get them. And then when you're done, head on over to the soon-to-be reformed Google, YouTube, type in Tasty Live, find our channel, go to the live tab. I'll get it. And find this big head on a big red thumbnail somewhere and jump into the chat. If you want your screen names and your comments, hopefully one of these is correct, one of these fingers. If you want them on the screen, our producers have them up there. Your screen names, your comments all show long. All you got to do is subscribe to the channel and get those phalanges working. Tell us whether you made money. Tell us whether you lost money. Type in random ass characters for all we care. Just to help us spoof the Google algorithm into putting us in front of as many people as possible and saving the world one view at a time. Ilya Spivak, we could start with, so many targeted questions here. I'm going to start open-ended because, you're still seeing, I want to call it relative weakness in the market, signs of sort of distribution. I don't really know what I'm seeing on a day-over-day basis. So I'm going to ask you an open-ended question before we get into some specific headlines and specific catalysts for both risk-taking and risk distribution. My good friend, NASDAQ was down about 1/10 of a basis point. Everything else was just slightly positive. You could argue that was a good sign, because risk had sold off so much early this morning. I mean, we were down 1 to 1.5% within an hour of the open before rallying to get to unchained. So in some small way, you could see that as a sign of, take away today's risk action as a positive sign. Is that how you see it, as the glass half full, Ilya? Or do you see it this morning as the sign of truth? What's your take on today's price action, man?
So I looked at what equities were doing today, and it seemed like there was a kind of moving back and forth on underlying risk sentiment, and maybe repositioning ahead of Nvidia earnings. Obviously, it's kind of a quiet week for macro data, and Nvidia earnings at this point is a macro event, because it is so, and that's not a controversial statement. Everybody has been writing about it as such recently, basically saying this is so important for overall sentiment that this might as well be a Fed policy announcement type of thing, or a big U.S. economic number. I thought what was interesting was a lot of the moves basically reset to where they were kind of near the end of last week. So the dollar came back to its highs. If you look at the euro as a kind of stand-in, but didn't really break out. The bonds came back to the bottom of the recent range, but didn't really do anything beyond that. Maybe the standout as far as movement for kind of the big macro assets was a little bit more of an uptick in gold, but again, it kind of reset to the middle of its range after Powell basically put in the bottom last week. So for me, what all of this looked like was a reason to clear the portfolio. Because it looks like a lot of what's been the move for basically 2 weeks, or 2 months rather, is over. Or at least isn't finding any more momentum. I don't think it's that the story has changed. We're still looking at a U.S. economy that's outperforming everything else. We're still probably looking at fewer rate cuts next year. We're still looking at reflation as the dominant direction, not only because the Fed is biased to cut, but because the Trump win gives us some very inflationary type of policies on the menu. And the market told you that. That's not an opinion. Look at what the long bond did on the day of the election. That was the low. So you look at it and you say, okay, well, this has been the story really since middle of September. And now the progress on the story seems to have run aground. Dollar hasn't really gone anywhere since last Thursday when Powell made everybody's speculation basically reality, saying the Fed hears it and they're on the same kind of time. Of course, Michelle Bowman had to come out and throw some fireballs out there today, but we know where she's at. Dissenter though she is, we have the bonds that haven't done anything since the election. So I took off my bond shorts. I took off my dollar longs. I took off my gold short back on Monday. So I cleaned house today.
Shit.
Also took off my S&P short that I had from the top. Though I still have my NASDAQ short. I think that one is maybe still good for it.
Oh, God. That's the one I need you to close. Market dumps when you puke that. I'm just joking. I'm leaning a little long bonds and I'm leaning a little short NASDAQ. And if I had to, dude, this is not a very good reaction in the extended hours. We closed at 145.89. We are now 144.10 by 144.25. And call me crazy.
I sort of expected we might have this, and so I kept NASDAQ of all of them.
I think I don't know. This is probably totally biased. I'm just seeing what I want to see right now. But some part of me goes, that much of an inside move. So the expected move, I think it started off in 9%. I think it came in to maybe 8%. And to me, it's a whole big old reason to just puke on tomorrow. And it would be perfect if they just do nothing into the open. It's even more of a reason to sell into them. But revenue for Nvidia, $35.08 billion versus $33.16 billion expected. Earnings per share, 81 cents adjusted versus 75 cents adjusted. So revenue was up 94% on an annual basis. Versus the previous, it's a slowdown. You've been talking about this. The rate of change continues to come down. So the revenue growth in the previous 3 quarters, last one was 122%. Prior to that, 262%. Prior to that, 265%. So this continues its trend of growing, but growing at a slower rate. The law of large numbers should tell you that's what you should expect, especially when you get into a $3 trillion range in terms of company valuation. Mm-hmm. So the numbers themselves, man, And, we don't make it a habit of really reading the numbers because who the hell cares? We're not stock analysts. It's more, what's the reaction?
Right.
And to me, the reaction is telling. You finally got the nothing burger. You finally got the report that was strong by any metric. It's strong. But the problem you end up running into with stocks like Nvidia, which are priced the way that they're priced, is 100% growth year over year is already priced into the stock. And when you get to that point, I know, but it was always when.
This is the whole thing.
It was the right narrative. It was just when. And now you're in a situation where 100% or 94% revenue growth year over year has put them $1 lower than where they were on the close. And to me, that has pretty big implications. I would not want to be long going in tomorrow, but I might be crazy. I'm already short. I'm talking my book. What are your thoughts, Elliot? Am I reading too much into this?
No, I agree. I think you have to look at this in one of two ways. And if you're looking at it as an investor, you're saying, well, what has changed? Nothing has changed. Are we going into the great and wonderful AI future at some point in the next decade? Probably. Sure. The Nvidia story is about building out capacity for it. They're still the leader, and in 10 years' time, they'll probably be worth more, and we'll probably all be talking to each other through mental imaging somehow in our flying self-driving cars. Whatever. Sure. But as a trader, you have to look at this, I think, and say, okay, this is not a fundamentals-driven thing I'm doing. It's a speculative sentiment thing I'm doing. And with something like Nvidia, you have had now 6 consecutive quarters, this is the 6th, of these earnings surprises getting smaller and smaller and smaller. And that tells you that the market is, A, getting better at benchmarking what a number that makes sense looks like. Number 2, you're running out of speculative juice. Of course, Nvidia is going to report earnings that are a little bit better than expectations. I think that's the baseline. Sort of like if you were looking for, let's say, a rate cut from the Fed and the Fed cut rates by exactly the amount and didn't give you any clear guidance, right? That's baseline. Markets really have no reason to speculate this way or that. Speculation becomes reality. There's no reason for the price to readjust. Let's say you were looking for an unemployment number that's X or an inflation number that's Y, and it comes out bang on expectations. Markets have no speculative juice. For Nvidia, I think some degree of upside surprise is on the screws as expected. What you want is the quotient of surprise moving greater, because at this point you're in a place where every time that there's earnings, you're asking, to quote the great Eddie Murphy, what have you done for me lately? Mm-hmm. And if there's not speculative hopium there that gets fed, the market just runs out of juice to keep bidding things up, because it's not about the fundamental narrative. It's about valuation and forward-looking speculative appetite. And the more you constrict the quotient of these surprises, the less speculative appetite there is, until you invariably hit a wall. And last time we got 5% surprise, and the stock just didn't go anywhere. This time, you get an even narrower surprise of 4% and the stock looks like it's biased down. So the speculative juice seems to have all been drunk at this point.
Maybe. I think back to, I want to say it was last quarter, but it might have been the quarter before, or it might just be a pattern that plays out. I want to say last quarter, this was a slow bleed. Nothing really happened in extended. Nothing happened in pre. Nothing happened in the early part of the session. And then it was just like, zoop. By the end of the day, we had a couple % move to the upside, more than people had expected. So I guess I wouldn't put the nail in the coffin in Nvidia just yet. I mean, we still got to play the game, right? We'll see what happens.
Sure.
But I also think I was like, no, but I'm short Nasdaq for this very reason because of the Nvidia short exposure I wanted.
Yeah.
You know, there's some part of me, and people are gonna laugh because I got a little bit of pie in my face, like. Nvidia at 150, that felt like, oh yeah, I want to be short this into the event. Nvidia at 139, where we ended up getting to just a couple of days ago, well, that creates a whole different, you know what I mean? It creates a whole different dynamic in terms of price and value. I know that seems silly, but that $10 range, that is the expected move. So the expected move is $13. So if you're at $150 and you've got a $13 expected move, well, that seems rich. You get down to 140 with a $12 expected move. Well, that's a different ballpark. And so I'd made the comment that it kind of de-risked a little bit, but the joke's on me because it ended up getting exactly mid-range. It got right between 140 and 150 going into the event. So the joke's on me. It got to exactly its mid-range. Vol hasn't really come out here, Ilya. 17, 16 in the VIX, /VX, VIX futures come down just a little bit, but not much, 1695. What do you think the market needs to see to pitch Vol here? They've already got the report. They've already got a fairly muted response here. Is it in any way surprising that VIX futures aren't necessarily moving more to the downside, in your opinion? What's the market got to see to release hedges here to unpin Vol?
I think what they want to see most likely, and obviously who knows, but I think to me it seems to make sense that what you want is the Wall Street response. I mean, this is the largest company by valuation once again in the world. You're going to want to see what kind of a sentiment indicator this is. You're now in the depths of early Asia markets. You don't have a lot of liquidity yet. Nothing has really opened yet. What you're going to want to see is, what does Japan do with this? And then what does this mean for Chinese markets? Does mainland do anything with this? And does that matter? Does Hong Kong do anything with this? Does London later, as Europe opens up, do anything with this? So I think watching NASDAQ futures here might be the best kind of indicator for what vol is going to be biased to doing. If you watch this now and you say, okay, as markets start to open around the world and they start to digest this because they're going to get to see it before Wall Street, at least the cash open, comes around. What are they going to do with general sentiment? Because if the story basically from a year ago to now has been, on one hand, we have this industrial revolution level story with AI, and on the other hand, the enabling of that industrial revolution because the Fed is looking to lower basically global borrowing costs, because as the Fed goes, so too does the cost of dollar financing, and dollar financing is the most important kind of financing because the dollar is the ubiquitous unit of global commerce the world over. If that's been the story for the past year, if that's how we have these explosive gains, no recession after the big tightening, now the big tightening is over and borrowing costs are going to come down and they're going to enable the great and wonderful next industrial revolution phase. If that's what the rally has been about, you're kind of out of ammo on the story. And the speculative interest fading out of Nvidia is kind of a great avatar for that. So we're going to have to watch, I think, here. But in a sort of curious sense, we might be at something of a tipping point where the dollar has had a massive run. Bonds have had a massive sell-off. maybe this whole thing is a little bit overcooked. And you could be getting to...
When you say the whole thing is overcooked, you're not saying the dollar move, you're not saying the bond move, you're saying because there's a run of the dollar, because there's a sell-off in rates, we could, meaning that the equity market rally is overcooked. That's what you're saying, correct?
Well, I think the equity market rally is overcooked, but at the same time, the reflation story in the U.S. that's been the defining story for global markets basically since middle of September, maybe that's overcooked as well. Not because the actual facts of the story are different, but because speculative interest in that, as with AI, has hit an intermediate wall. Not the forever wall, not the this is over in perpetuity. No, I think reflation is a story that's here to stay into next year. AI is a story that's here for years to come. But the immediate speculative interest in these things may have run aground.
Let me repeat to you what I hear you saying and the way that I understand things. So price is reflexive. So when these narratives get going, if people believe that is a higher than 50 chance of being correct, in other words, the inflation or reflation story, if they believe it to be true, they don't wait for it to show up. And so what they do is they put their chips on the table early. But then what also happens, because you've already put your chips on the table before the evidence, well, you've already fully baked in those expectations, and now the risk to reward is on the other side. But what also happens is, because you've already bid up those assets, you potentially have thwarted the forces that would have took them higher had you not reflectively bought into those assets early before the evidence showed up. So I hear you explaining in my own way. I know you might be thinking of it through a different lens. I'm hearing reflexivity.
No, sure.
The market is already sort of priced what they believe to be the highest likelihood. But that can create a risk reward of actually betting the opposite direction. And you saying that the inflation narrative is fully cooked, I hear it as the risk reward is there's not much juice left to squeeze by betting in that direction. That's what I hear you saying.
Right. And by the way, that's pending evidence, right? If you want to look at this as reflexivity, as Soros would write about it, or you're talking about some version, obviously not the absolute version because that's nutty, but some version of efficient market hypothesis. I don't believe in absolute market efficiency because that's obviously not the world we live in. But obviously the mechanics of market efficiency, which is to say markets discount news, they are speculative and they front run things before they occur, establish expectations, and then when those expectations clash with reality, that's when you get volatility and a readjusting. That's economic data is surprising this way or that. That's the Fed saying something people weren't fully baked for. That's earnings surprising this way or that. All of it is basically describing the same thing. Markets are forward-looking. They position based on speculative assumptions and then wait for reality to either endorse those assumptions or not endorse them. And if the reality endorses the assumption, well, then there's no more speculative juice to squeeze because the price already reflects what the assumption was. And, for example, with the dollar, Jay Powell endorsed the assumption on Thursday. The dollar hasn't made a higher high since. The Trump election, I think, endorsed the assumption in bond markets going from mid-September. They haven't made...
I would say it the other way. I would say bonds sort of priced the election outcome in a way.
Right. Versions of the same thing.
Okay. I see what you're saying.
Right?
Go ahead.
Versions of the same thing. Yes. I agree. I think it's all kind of reached a point where speculative interest in what would be reality has been taken away because reality is here. And those things are in the rear view. And now you are basically out of fodder to keep speculative interest continuing to burn. That's why bonds haven't made a lower low. The dollar is struggling to make a higher high. Nvidia can't rally on what is in absolute terms continued momentum in earnings, in revenue, all of that. So in my mind, this makes for a kind of interesting scenario where you might get bonds higher, you might get the dollar lower, and you might get stocks lower too.
That's what I'm betting. That's exactly what I'm betting. I'm betting bonds up, stocks down.
Yeah. And the dollar down with all of it, which would be a weird thing.
I'm not smart enough to add the third leg of that parlay, so I kept it as a two.
I'm over here juggling all of
it. I can't do it. There's nothing pisses me off more than getting two sides of a three-sided parlay right, and you're like, damn it, I just had to go for that extra payout. Let me ask you, let's play the devil's advocate to ourselves, because I know you're leaning short into tomorrow. I'm leaning short into tomorrow. So if in the case that we're both wrong, which is the funniest outcome, if you ask Elon Musk, is the highest likelihood outcome in the simulation we're living in. To me, I go, well, Nvidia's trading at the highs. Mm-hmm. So even if we carry forward, let's say we max out the expected move to the upside, somehow we're plus 9% tomorrow in Nvidia.
Yeah.
Well, then I go, well, where's your biggest bang for your buck? Is it Nvidia? Because most of the rest of the SMH is not trading at highs. Taiwan Semiconductor, Broadcom has had a pretty big sell-off. Micron has had a pretty big sell-off. To me, I go, the leverage on a dollar in a semiconductor, in an SMH type holding, I don't think it's Nvidia, and that to me it
might be SMH itself.
To me, it's another self-reinforcing reason as to why I don't think this thing gets the upside. So now, but I'm trying to do devil's advocate here. AMD, same thing. So, but my point is, if there's the Wall Street response is highly positive to the upside, and this reinforces SMH leadership, to me, I go, well, the dollar, the incremental dollar doesn't go to Nvidia tomorrow. It goes to a bunch of the stuff in SMH that is underperformed, unless this is really just a story of Nvidia's the only one winning. Nvidia's the one that's actually it's taking revenue and market share from everyone else, and they're really the only one winning in this particular scenario, and maybe that's really what prices are saying. I still think if SMH is going to retain leadership, and we're totally wrong in the very short term, an incremental dollar is better bet on some of these other more discounted names. Are you in that? Would you say that's rational and reasonable? Any reason to disagree?
I think it's rational and reasonable. I don't usually take individual stock bets because my macro lens is kind of is a little bit bigger picture, but it's completely reasonable. And from my kind of macro vantage point, if the market goes la-di-da, risk on, that this was great, let's go, I think one of the more interesting things is a rug pull on the bonds, where everybody's been sitting looking at the bonds idling and going, oh, well, you've rallied these yields for 2 months. Surely now is the time that this turns. And the bond goes, yeah? You sure? How trapped are all of you in long bond exposure since we tried to bounce in October? Let's go ahead and cut you one more time. And the bonds actually go down because everybody goes, oh, well, risk on, yields higher.
Yeah, I agree with that. I actually think that in the absence of a catalyst, I think that's what happens. But I think it's sort of like walking through, it's like a forest with really dried leaves. You just need a spark. And I think if you get that catalyst, whether it's news out of Ukraine or Russia or Israel, Gaza, if it's some surprise out of the new administration, like you just need a spark, I think, with bonds. And I think you get I think you get a 3-point rally in a single day. And that's sort of what I'm playing, that asymmetric upside. In the absence of which is why I'm betting really small, by the way. I normally bet this stuff a lot bigger. These are really tiny bets. But I just think the asymmetry on a move, on a big move, is to the upside in bonds. But I think you're right. If you don't get it, I think they keep leaking lower. I agree with you. I think what's most likely, what's most fitting, and I think Wells Fargo, and I can't believe I'm quoting Wells Fargo, but I think this morning they moved their 2025 10-year target. It was 4 to 4.5%, and they moved it to 4.5 to 5%, which sounds smart. I'm sure they had some really cool report, a bunch of fancy words that sort of validated it. But it's really simple, man. And I've shown this before. I'll show it again real quick, Ilya. But the natural or the long-term distance between the 2-year and the 10-year in yield is between 100 basis points and 200 basis points. That's where we are. The actual average, if you do the math, is right around 100 basis points. Jim Bianco did that math. So where's the 2-year? It's at like 4.4, 4.3. Add 100 basis points, and where are you? You know what I mean? It's not like this stuff that people make it really complicated, and it's not really that complicated. It's not that complicated, and they're not really that smart. And so we've moved when the 2-year was at 3 and change, 3.5, 3.65, wherever we were, it made sense to call the range 4 to 4.5. You still thought we were going to get lots of cuts. At 4.5, with less cuts projected, it's, come in from the golf course, move that up by 50 basis points because the 2-year's up from 3.65. You say that to like an intern, and you go, okay, I'm going back out to the golf course.
And go back to the golf course.
Yeah, that's the level of thought that goes into some of this stuff. It's ridiculous. Anyway,
especially
maybe I'm just
with the holidays coming up. And the holidays coming up present you with two different things. Number one, people go, I don't want to not take profits on things that I've been sitting on for a few months that have worked and screw up my year-to-date high watermark. So maybe I want to just divest of the things that have been working and take something off the table, because while I'm sitting over turkey next week, I don't want to think about it. That's one. Number two, because a lot of people are doing that, liquidity is going to come down. And liquidity coming down is the kind of thing that gives you grass growing, paint drying, unless something happens. But if something happens, less liquidity actually means more volatility, sharper moves, because you have fewer buyers and sellers at every level, and so things get jumpy. Let's say you get a Treasury Secretary announcement, finally.
What do you think it's going to be?
And let's say that's something that inspires, I don't know, maybe a lower sovereign risk profile for U.S. debt, because it's someone that's sensible. And by the way, don't get me started on some of these picks, but the economic team have so far been very kind of experienced, seasoned markets people. The Lutnick nomination for Commerce makes sense.
For Commerce makes sense. I didn't get him as Treasury Secretary. I didn't understand that. But I get Commerce Secretary.
Yeah, I get Commerce. I get Commerce. Lighthizer back as USTR. We know, we've seen this before. This is not a shock. We know what that looks like. He's not going to do anything bananas. At least we know that he didn't do anything bananas last time. So you have that. The candidates that you have, from Besant to Rowan. According to Polymarket, these are the front runners. These are not people who you wouldn't think know what they're talking about. You may agree with them or disagree with them, but these are people who know the markets, who know the toolkit, who know the variables, who know how the real machine works. So maybe you get that kind of a nomination and you go, well, this is not a kind of head scratcher nomination. This is a safe pair of hands, much like Steve Mnuchin was a safe pair of hands in the first go round. So good, let's take some sovereign risk out of bonds. Only there's less liquidity, and so the bonds really go.
I don't know what that catalyst is, or if we'll see it. I'm betting this direction for the exact reason you're saying. I just think there's jump risk. There's jump risk all over the place here for the bet. People know me. I've been talking about 5% yields in the 10-year, which would then bring 30 years higher than that. I don't know when we get there. I don't know the path that we get there. I know it won't be in a straight line. And I can hold two thoughts in my head at the same time, Ilya. Thought number one, I think we head towards 5% yields in the long end. Thought number two, bonds have fallen very far, very fast, and they look to be basing out a little bit. And there's many reasons to think you could get a little bit of a bounce.
The scariest thing is I agree with both of those ideas. I think the trend in rates is structurally higher, but before we set another high, we got to come back, or at least the markets seem to be saying that they don't want to keep making headway, though nothing has changed to alter the narrative. And when the market doesn't want to move on news in the same direction that the news is leading, that's telling you they're sniffing out something. I would almost rather see a market that I think should be going down go up on positive news than to see that market countervail the news and go up on negative news, because that tells me I'm really wrong.
All right, let's talk. We're dancing around interest rates here. I'm curious. Give me your react. What did you hear from Michelle Bowman today? The biggest line. I don't want to bury the lead here. The biggest line is, she basically said her estimate of the neutral rate was much higher than pre-pandemic. That she would prefer to proceed cautiously on rate cuts. That shouldn't necessarily be a surprise to the loan dissenter and the first the rate cut in September, the 50 basis point rate cut.
When the Fed has been nudging up its long-term rate estimate for a few quarters now, so we know this is what they think.
Right. Also the market. I mean, the 2-year is moving. The short end, the market is moving higher. You can't move the Fed funds rate, right? Because these guys control it. But the short end of the market the short end of rates that the market does control is moving higher. So it's clearly what the market thinks as well.
Sure.
Again, Ilya, what did you hear, and what are the implications in your mind, if any, to risk assets or to the lens with which to view interest rates, at least from the dissenting point of view, if not from the whole FOMC?
For me, this was kind of like, I told you speech. Because
what do you mean?
Last week, Powell already owned this. Now, he wasn't as fiery. He wasn't as fiery as she was. From her standpoint. No, from her.
I told you from her. Okay.
Yeah.
I thought you were saying it from your standpoint.
Oh, no. I mean, when I'm perfectly fine on my 8.5, 9 weeks of a trade. That's thanks enough. I had from the early parts of September, long dollar, short bonds, and then going into the election, short gold. So thank you very much, markets. I'm good. From her perspective, she came out and basically said, you see why I dissented? Who was right? Michelle was right. Ha, ha, ha. That was kind of the spirit of the speech, I thought. Because what have we heard since? After the last FOMC, what did Powell do at the press conference. He looked like his feathers were ruffled, so he didn't do it as emphatically as he did the following week. It came out later that he had a call with the president-elect earlier that day, so of course he looked like he'd been through it a little bit. They've had their differences before. And the speech, both after the FOMC at the press conference and last week's policy update, as it were. I mean, it was unclear why Powell needed to speak a week after an FOMC and basically say the same thing, but we certainly saw why. Markets listened more attentively this time, and he was more eloquent this time and said, we're not on autopilot. Repeat, we are not on autopilot. We do not need to be in a hurry to cut rates. The economy is not cool. Inflation is too high still. We are not cutting for any kind of economic trouble reasons. These are maintenance moves to make sure we don't over-tighten. And right now, it's a real fine balance, meeting to meeting, to make sure that we dial it in correctly so that inflation actually goes to 2% and we don't kill the labor market as we achieve that. It's basically what she said, only she said, yeah, but I was on that time before all of you. You all have overshot. And I was right, so ha ha ha.
You're pretty good at paraphrasing. Have I ever told you that, Elliot?
I have in my mind's eye Bizarro Michelle Bowman. It's like that sketch with Obama and Obama's translator. I am the Fed speaker translator.
So, is this actionable in any way? In other words, let me ask this a different way. We've talked about how you think about the long end.
Yeah.
Very rarely do we either take positions or talk about positions of the short end. If we're putting on flatteners or steepeners, those are generally the only scenarios. I've done it a handful of times as well.
Uh-huh.
Do you have an opinion on the short end here with like, let's call it ZT? Where is my? Yeah. Do you have an opinion? The 2-year at 4.29, right around 4.3. Do you have an opinion?
I mean, ZT is basically sitting in the middle of the range that it's occupied since essentially October of last year, which is kind of interesting. Like, if you look at a weekly chart of the continuous ZT contract, 102-ish is about the middle of that range. And we're there. So I don't think there's anything immediately actionable here. I mean, the story in markets over the past several months has been of we're going to see the start of the easing cycle. Okay. We're going to see that happen in some magnitude. Then we started to speculate about the magnitude. Then we started to speculate about the pace. And the most recent kind of round of speculation has been the floor on rates is higher because what the Fed is doing is reflationary, and the election only amplified that sense. So when we look at what's going on here, for me, the long end has been more interesting because all of the story has been, yeah, they're cutting, but how much and for how long, rather than they're cutting. The idea that they're cutting, I think, has been there for a while now. And so the 2-year hasn't really done a whole lot. It's kind of been up and down in this narrow range. I don't really see anything immediately actionable here. There's not even that much IV in it to squeeze out. So
there never is. Yeah.
There never is. So when you look at this, I think if you want to trade basically the past 2 months going into reverse to some extent, not because the overall story is different or the economy has suddenly turned or whatever, but because speculative interest hit a wall and now there's some room for distribution before the next leg. If that's what's going on, then you're looking at ZB, you're looking at ZN, If you want to do this through ETFs, as I often do just for sizing and liquidity concerns, you're looking at SHY, you're looking at TLT, of course, and then you're looking at the dollar.
Here's the reason I ask is if 2 years don't go anywhere, and what you and I both think could happen, which is a little bit of rally in the price of bonds, which means yields fall in the long end. We're only like 10, 15 basis points difference between the 2 and the 10. So my point is, ceteris paribus, if ZT doesn't move, but you feel like long end rates fall, we could be talking about a reinversion of the yield curve. Yeah. So basically my point is, without rallying in the short end as well, then we could be if your scenario plays itself out, and mine as well, we could be talking about a reinversion of the yield curve, which should I don't know if that should be a really big deal at this point in time, quite frankly, but it could be in the cards for the next 3 months or so.
Back to like a 30 basis point inversion from essentially now being about 9 basis points into positive territory.
Yeah. I wonder if it gets that deep though. Like
maybe not.
Maybe like 10 basis points or something like that makes more sense to me. Just
15 seems to be the top of the kind of steady state that we had between October 2023 and let's call it mid-June of this year. The middle of the range is about 30 basis points. The top of the range is about 15 basis points. So getting back to essentially 15 basis points sounds very kind of easy to do for me.
All right, let's do this real quick. Before I get into the dollar and let you just run like a wild hog, I want to throw in a couple more stock symbols. And I appreciate a few people in the comments said, hey, man, you spent the first 45 minutes of a 90-minute podcast on bonds. Switch it up. I was like, all right. So I'm trying to throw in a little bit more symbols. I appreciate the feedback. I take no offense to this stuff. If you guys don't get value out of it, then who the hell am I doing it for? I'm not doing this for myself. So what you had mentioned, the sector performance at the top of the show, and healthcare being the leader today, energy followed by energy materials. To me, that's your inflationary clue every time that happens. But on the flip side, your cyclicals like financials, discretionary, which is XLY, staples at the bottom, which is the defensive. But the point is, healthcare was at the top, was today's leader. Yesterday, I had made the point, we're sort of joking about the discount that was priced into Pfizer, Eli Lilly, Moderna on what seems to be at first the likelihood that RFK would be named as the secretary of HHS, and then the appointment came with about in Polymarket between a 70 and 80% chance of him being getting through the nomination process, the appointment process. And so we talked about Pfizer and Eli Lilly yesterday and wanting to add, because I don't have no healthcare companies. So Pfizer had a 60 or 70% implied rank yesterday, Ivy rank, but the puts trade so frickin' cheap. So I ended up buying some Pfizer early this morning, feeling gross about myself. And the irony is, healthcare was a big winner today, but the only dog in the bunch was Pfizer. Like Eli Lilly rallied 3%.
See, this is why those of us that are macro-minded don't try to, at least I don't try to pick individual stocks, because the few times that I do, I get railed.
I know.
Because I don't really know what I'm talking about.
I can't help it. But let me ask you then, on a zoomed out basis, is there any part of you that plays the sector game? Like, do you play the XLE, the XLV, the XLY, long or shorts? Like, do you play that game? And if so, does Ilya Spivak have a position on healthcare? If not, do you have an opinion, and where would you look to express that opinion through a position?
So have a look at XBI.
Okay.
Because this, I think, is an interesting situation now. So on the RFK nomination, this thing got absolutely shellacked. And I think there is an interesting thing here happening now. In my speculative mind's eye, I think if the Republican Senate is going to fight any of Trump's nominations, it'll be DOD, it'll be DOJ, it might be DNI. It won't be HHS because you can't fight your incoming president's picks every step of the way. And I don't think this is the hill they're going to die on. So I think if you do anything, you fight between kind of the more traditional hawkish wing of the GOP and the more isolationist MAGA wing. And so the fights that you're going to have are going to be over DOD, they're going to be over DNI, and in the sense that nobody in Congress seems to have anything nice to say about Matt Gaetz in DOJ. So you look at this and you say, all right.
To me, that's always a contrarian indicator, by the way.
And lately, looking for contrarian indicators in U.S. political outcomes has been a very fruitful thing. Mm-hmm. So you look at this, I think, and you say, okay, you've had a very clean breakdown in XBI. The up move from April of 2024, where the bottom on that up swing most recently is, that's been overturned. The range that you carved out between about 95.5 and call it 103, 105 at the top, that's been cracked. And over the past 2 days, you're sort of retracing. So I would be looking at 95.5, 95.4, which is the bottom of that range, the lows from September, the lows from October, as areas to maybe look for downside exposure and say, this thing has made a directional move. It's doing some sort of a digestive retracement kind of a thing here. And I want the short side, but I want the good risk reward on it. So maybe this thing backs up a little bit more, and the moment it shows some sort of signs of the retracement is out of juice, a candle that looks unsure of itself, something along those lines, a failure to make a higher high, and then an intraday lower low, either on a 4-hour or an 8-hour chart, something like this, maybe then what I'm looking for is a put.
I'm just going through the holdings here by weight. Insight Corporation, Terra, United Therapeutics, Gilead Sciences, Neurocrine Biosciences.
By the way, a very similar story in XLB.
Amgen, AbbVie. Yeah, it is trading with sympathy. Nice.
XLV
so
is just, you'd be looking for maybe like 145.80, 146 as the place where you had your breakout spot, and you'd look to kind of backfill into that. But the up move from let's call it October 2023, where it moved basically with sympathy of the broader markets, that was already broken down by the call it tail end of October this year. So the trend is already biased lower. Maybe you backfill to like upper 145s, 146, and then you look for a place to fade it there.
A little bit of a head and shoulders.
Yeah.
Right here. Mm-hmm. You know what? Watch healthcare be the the finance it's 07 through 09, the great financial crisis was all around the shenanigans in finance. Watch 2005 through 2007 be all around the built-up shenanigans in healthcare, and everyone realized, like, holy shit, these companies aren't solvent if they're not sucking off the tailpipe of the U.S. government and
that
the trillions of dollars.
That would not surprise me in the slightest.
It wouldn't either. And all it took was we're going to take away a little bit of these subsidies.
We're not going to let you advertise on TV anymore.
Good night. All of a sudden it's like, holy shit, it's over. These companies didn't have any clothes on the whole time.
Yeah. Red 40 is out and you can't advertise on
That's
TV.
all it took. That's all it took.
Good night. Wouldn't shock me in the slightest.
All right, Tuck Dollar, baby. I'm not even going to ask you a question. I'm just going to give you the microphone and say, whisk me away with your brilliance here. How do you think about, you've already alluded to sort of your position here. You've already alluded to the fact that you've also flattened out. It always surprises me. You always surprise me at the moments when you flatten out and when you take a position. I've like when you dance with somebody, you sort of get their rhythms. You sort of like, okay, I see how this works here. You've got this sort of wacky Russian rhythm to your trading style. And I never know when you're going to take a position. Like the other week you go, I'm short bonds. And I'm like, what? Now? And then
they go down.
And then you got a couple of points. I'm like, what the hell was that? So talk to me about the dollar, man.
I mean, I'm looking at the price action. My thing, I mean, I haven't quoted the great and powerful Ira Harris in a while, so I'll do it again. My thing is always, am I right at the right time? And I'm paraphrasing here, or am I right at the wrong time? So I have my macro bias, of course. I think of the world in terms of a macro narrative or a kind of range of macro narratives where I say, okay, the world has this possibility or that possibility or that possibility. And if you extrapolate this one, the asset breakdown is that. And if you extrapolate that way, the asset breakdown is this, etc. But I look at the price action to tell me which world I'm in and then to kind of follow from there. So I look at this and I say, okay, has anything happened here that should tell us that the dollar isn't going to have yield advantage against the other major currencies? Did the U.S. economy get some sort of bad data? No. Did the Fed start to sound less hawkish in its rethink? No. So why can't the dollar rally? Maybe it's that it's run out of steam. And then when you look at the continuous 6E contract, especially on a weekly chart, you find what looks like maybe an interim inflection point, because you're basically down at the bottom of a range that has held in euro since March of last year. And you go, well, this is a logical place for the euro to hit something of a wall. Maybe there's just speculative exhaustion in this move. And
you can't go straight to parity, right? You got to make it a little bit fun along the way.
Right. And markets don't move in straight lines. That's not how this works. So I look at this and I go, okay, it looks like everybody that wanted a dollar long maybe has one now. And all you really need is a little bit of something that says, you know what, maybe yield differentials narrow a little. So I go out there and I go, what would do that? And later this week, November global PMI numbers are coming out. And quietly in the background, for all of its warts, economic data out of the Eurozone has started to get a little bit better relative to forecasts. Not good, better relative to forecasts.
Mm-hmm.
That doesn't mean that the data is positive. It doesn't mean that the Eurozone economy is doing well. It isn't, and it isn't. But what's going on is the people that sit there and turn the dials on macroeconomic models at the big banks, at the big funds that submit their forecasts into these consensus forecasts that we then look at on Reuters, on Bloomberg, on wherever, right? Where do these numbers come from when we go, oh, it's expected to be blah, 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 blah. Expected by who? Well, these big data aggregators go and they ask. They ask the big sell-side banks. They ask the big funds. They ask the big market-watching research houses. And they go, where do you think blah, blah, blah is coming out? And then they take it, drop it into a bucket, find the median, and that's what the consensus forecast is. And there's reflexivity there as well. Because the analysts that look at the consensus forecasts go, well, if I'm near the consensus forecast and we're all wrong, then I don't look like an idiot. If I'm way out there and I'm right, I'm a hero. But how often is that going to happen? But if I'm way out there and I'm wrong, though, and everybody is right, I look like the biggest idiot out there. Everybody knew, and I'm the only dumb one that was all the way over here. I have to censor myself there. And then I look at this and I go, okay, wait. Eurozone economic data has started to improve relative to forecasts. It's missing by a smaller and smaller margin over recent weeks, and this is data that Citigroup compiles. And then more recently, maybe about a week or two now, it started to surprise higher a little. Again, not good, just better than expected a little bit. And that tells me they've turned the dials in a way that's benchmarked it. And now you get these PMI numbers. Let's say they're a little bit warmer. The expectation is 50, exactly, on the dot for composite PMI. So a second month of the Eurozone economy doing nothing. Not growing, not shrinking, marking time. Okay, let's say it's like 50.4, 50.5. You get a little bit of a soupçon of growth, if you will. And all of a sudden it's like, well, is the ECB now going to think less aggressively about cuts next year? Mm-hmm. Okay, that's the third biggest engine of global growth after the US and China. Wait a second. So we're going to get higher rates in the US than we thought. Maybe the floor is higher in the Eurozone. Okay, so maybe the floor on borrowing costs worldwide is a little bit higher. Number one, that means the dollar's very extrapolated yield differentials against everything in sight are maybe a little wide. Maybe that needs to narrow a little. Dollar goes lower, euro goes higher, maybe the pound goes higher in sympathy, maybe the Aussie goes higher in sympathy, and there's a generalized dollar backstep.
You just talked me into this trade, by the way.
That's really all you need.
I told you I only wanted exposure in equities and bonds, and I didn't want a three-part parlay. You just talked me into it.
There's your three-part parlay right there.
If you're taking me down, I'm going to let you know about it every day for the next 2 years. I don't care. Yeah. I'm going to, and it's your fault. Yeah.
I'm going to look. So the trigger, right? What gets me into a position?
Okay.
I look at the euro here and I go, all right, here's your range. Your range is basically the low, which is 105, let's call it, and the top of the range very cleanly at 106. Show me a move to 105, let's call it 60, 70. And you're through the middle of the range. Okay, now I'm excited. You get me above 106, I'm long. And then I'm looking for it to come back to first 107, maybe higher. And if it gets through 107, I'm building. It gets through maybe even something like 106.70. I'm adding.
I like this.
Just basically moving up the staircase.
I'm not going to wait though, like you. Why am I going to let those extra 60 bips go to somebody else? I'm taking them for myself.
I'm paying the 60 bips for a little bit more certainty. The market can have those.
Let me read you a couple of quotes here, Ilya. I think you'll get a kick out of them from the chat. Shout out to everybody in the chat. I know on Tuesdays and Wednesdays I'm less active reading the stuff in the chat, but I think you guys know why. We got great minds that come on. It takes a lot of brain power to stay with these guys. And I don't do a great job of paying full attention. The last thing I'm going to do is spread my attention around. Where was Donna's point? They're killing me. I don't think I'm going to be able to find it. But what she said was something to the extent of, I love Ilya's thinking. He's got levels within levels. His contrarian thinking is like a Russian nesting doll.
Yeah.
And then
that can get you into trouble also, by the way, because all of a sudden you start to extrapolate all of the threads, then you get yourself in a twist.
No, it's good. I love Ilya's style of trading. He has levels within levels of fading other contrarian traders like Russian nesting dolls. And then I think Vince K. Funny with Ilya low-key being my teacher in macroeconomics, I find that I think like him, but my thoughts are much more cloudy. Dude's brain has clarity. If you don't mind, man, we normally take 90 minutes. I don't think I'm going to make it the extra 15. If you don't mind, I'm hacking up over here. So I'm going to ask you. I'm going to do this next couple sort of rapid fire, if you don't mind.
Sure.
So I'm going to ask it as a basket. Gold, gold. You had a great call the other week. You and Pete Momet about being on the short side. Mm-hmm. We got to 25.50, which is the area I said I would nibble. I did not because I'm a big old chicken, in part. Pete also said wait for silver to come down to 30. At that point, look to start accumulating. You might get a bounce. He's right. Not a huge bounce, but a decent one so far. Mm-hmm. Do you have any strong points of view on gold and silver? And by the way, I hate that I can't ask you about Bitcoin. I hate that you still haven't orange pilled yourself. You will one day. And I hate that it hasn't happened, because if I throw anything at you, Bitcoin related, you won't talk price. You'll tell me why.
I can absolutely look at a chart and tell you where.
Oh, I know, but I don't want that.
If I had blinders on, I would think it's going.
Yeah, I don't want that.
But
that's
in
like
my mind,
the finance weatherman. That's not helpful. You know what I mean?
Yeah. In my mind, here's the thing: I'm never gonna have money behind it, and so what does my opinion really mean? Right? I don't have any skin in the game. All these other things I talk about are bets I have on.
That frustrates me. I don't get why. I don't like. Here's my question: how much time have you read? What's the book by Cepheus Amadomis? I always mess up his name. The Bitcoin Standard. Have you read that? No. Have you done any work? Did you immediately dismiss this thing and go, "This is stupid"?
No.
Or you've sat down and tried with an open mind to understand it, and then you go, "This is stupid."
No, of course. So I started as a skeptic, without question, but then I think you have to, if you're going to be an investor, if you're going to be a trader, you have to come at it from a neutral perspective, because you can't, just because you don't like it doesn't mean you shouldn't buy it. Just because you love it doesn't mean you shouldn't sell it. The question is not about being right. It's about making money. If what we're doing here is trying to make money, who cares if I like it or I don't like it? I care if it puts positive P&L in my account. So I think even just to understand why people would think it should go up, you have to go read about it and understand.
So what is it about the asset that you, now we're going to go the full 90. I can't help it. What is it about it that you hang your hat on and say,
it rhymes with every historical speculative bubble I've ever read about.
You think it's tulips?
I think it's tulips. I think it's railroads. I think it's telecoms. I think it's warrants. I think it's the South Sea. You name me a speculative bubble. It's that.
The dollar.
Dollar is not a speculative bubble.
Why not?
Because the dollar is the global reserve currency. And there is no alternative, and there is nothing more liquid, and there are no pretenders to the throne. None. Not one.
You can tell you've got this sort of Russian indoctrination. This is so. It must be.
No, it's just the reality of life.
There is no alternative to dollar. Dollar is.
No, it's just the reality of life.
Settle all trades. Is that racist?
Just because something isn't perfect doesn't mean that there is an alternative to displace it. Dollar has its issues.
You don't see it as an inflation sink?
No, I don't. What I see is a global economy that needs a liquid medium of exchange. Otherwise, global commerce stops. I don't see a constituency that wants global commerce to stop. Unless there is an alternative to the dollar to lubricate transacting in the global economy, it's the dollar or it's nothing. And there is no constituency for nothing unless maybe you're North Korea.
I don't disagree that there's not a suitable alternative yet, but but what I'm pointing out is the problems that we have as a society.
Sure.
The wealth disparity has grown so insane, and there's this sort of bubbling of unrest right under the surface, man. That's
not a dollar story for me, though. I mean, I agree with what you're saying generally.
Let me finish my premise. Mm-hmm. In my opinion, I had this discussion with this silver bug. His name's David Morgan. Mm-hmm. And one of the things he said was society is only as honest as its money. You don't have honest money. Well, money is the root of all incentive. And that incentive structure is rotten. It's going to permeate throughout society. And so while you might not see it as an incentive or a money issue, I think in many ways you go down the rabbit hole far enough, you're going to find that is in some way a root cause. So whether it's the UK farmers or Iowa farmers and their issues, with whether it's the inheritance tax over in the UK that they're fighting, whether it's shit in our food, all of this stuff at some level comes back to the incentive structures. And I guess
the dollar is honest money, though. That's the thing.
Yeah, I know you think it is, man, but there are enough people who disagree with you, and if there's no intrinsic value of the money, it's all full faith and credit. It's belief system,
all money is a belief system.
All fiat money is a belief system.
All money is a belief system, including physical.
It is a belief system, but fiat is 100% belief. There's no intrinsic. So there
is no such thing as money that isn't a social construct. All money is a social construct.
You're saying a different thing than me, though. You're refuting my point with a different point that is not congruent to the point that I'm making. Well, the thing you said can be true.
Bring me back.
The thing you said can be true, and the thing that I'm saying can be true. That's my point. So I'm not going to go tit for tat, because I realize sometimes that's what you do, and then I get myself arguing you when you're not wrong. And what I said was you're not technically arguing what I've argued, and you laid out this trap because you're a wily, squirrely one when it comes to the debate. I want to get back to this point, which is the money supply in a debt-based monetary system. We need to continually expand the money supply, and when that money supply expands, you got to choose. Are you going to send that money to rich people? In other words, supply side economics, where that money likely finds its way to assets, not necessarily directly into goods and services, or are you going to send it to the needy people, in which case that money is going to find its way? It's that higher velocity of money, and you're going to create likely inflation because there's going to be more demand for goods and services. At least that's what history has told us. These are sort of not great options. And in one way or another, it continues to fuel wealth inequality. And so we just keep going. It feels like we've met this point, which is Triffin's dilemma. Triffin said at some point, the needs of the domestic population are going to come in direct conflict with the international community's needs for lubrication of the reserve currency. So the world needs us to continually expand the money supply in order to fuel growth, not just here, but abroad. And if we don't do that, if we start to have strong dollar policies, it will improve our own purchasing power, likely at the expense of growth domestically and globally. But this is the dilemma that we're in. So the question is, how do you continue to expand that money supply without murdering everybody at home? And in some way,
I fundamentally disagree with the premise.
Okay, fair enough. Let me finish it, and then you pick it apart.
Mm-hmm.
So at some point, and I'm just, if at some level, everyone had access to a hard asset, right?
Mm-hmm.
If everyone was a homeowner, which we're not close, we're at 60% of home ownership. If everyone was a stock owner, which we're not close, I think 50% of people own stocks, then inflation would benefit all, not equally, but they would benefit all. But in some ways, it's benefiting some and it's hurting others. And we need to find a way to distribute something that gives somebody sort of this life raft to hold on as we continually expand the money supply. And maybe there isn't enough gold bars to go give that out to everybody, or silver bars, but Bitcoin is different. And I know I'm not a Bitcoin maximalist in any way, shape, or form. I'm speaking to the idea, the concept of a thing that is in fixed supply and how that fixed supply could end up working in a world where we continually expand the money supply. Anyways, my point to you is, if not this, then what? Because if we keep going this direction, man, I think we continually end up with more homeless, with less home affordability. I think our problems continue to compound and get worse and worse and worse without some sort of solution, and a solution that the government's not going to give us. There's got to be a solution at the incentive level, that the root level of the code, in order to permeate out to all. I'll stop now and let you do your thing.
So I think the entire construct that you've laid out here is logical if you believe in the construct itself and if you follow its logical progression. The problem is the entire construct is fundamentally wrong. The conception of what money is fundamentally wrong. The conception of what we're doing is fundamentally wrong, in my opinion.
Okay. Let's break down those three things. Expand on why those things are true in your opinion.
What is the dollar? What is the dollar? The dollar is a claim. It's just a token. It's something that we have taken, same way people have done with gold coins or seashells or carvings into a wall. It is a stand-in for value. It is a way to say barter doesn't work, because if I have a leg of lamb and what I want is an iPhone, I better go find somebody that needs a leg of lamb and has an iPhone to give me for it. If I don't have a lubricating mechanism, which is a holder of value that says, I can sell my leg of lamb for seashells or trinkets or whatever it is, whatever unit it is, and then somebody else will take those things from me because they, through a social construct mechanism, believe that somebody else will then take them from them and give me the iPhone. And what we need is a societal belief that we all will exchange the trinket of choice for things of value. That's what money is. That's why the functions of money are unit of exchange, store of value, most fundamentally, and a unit of account to see how much value everybody has, to have mutual belief that we'll all accept it, and to lubricate exchange. That's the function of money since the beginning of time, since we climbed out of the caves. Doesn't matter what money is. Now we look at the dollar. and say, well, is this good money? Is this a good form of money? Number one, it is not tied to physical value, which means it can grow elastically with our needs. And global population is growing. Global supply of goods to feed and clothe and to deliver to that population goods that it wants, that's growing. So what you need is money that can be stretched. It's not like the money supply is growing in some sort of idiotic vacuum. It's not like we're sending money out there. That's not what's going on. The dollar is a free-floating currency. Its supply is expanding because demands for money are expanding. With population growth, with more goods, with economic growth. Without money growing on pace with economic growth, that economic growth doesn't happen. This is why a deflationary spiral like the kind we had during the Great Depression is such a killer. What happened to get us out of the Great Depression? We jettisoned the gold standard. We allowed for deflation to be killed. We allowed for the money to expand. The money expands and it contracts with economic activity. Of course it contracts. Look at what's happened to the dollar since 2008. In fact, look at what happens to the dollar during the crisis. Trillions of value are destroyed. What happens to cash? It goes up in value. In fact, the dollar has been in an up move since it bottomed in 09, 08, relative to other currencies and relative to other assets, cash assets. Why? Because this is not a one-way bet. We're not sending dollars out there. The global economy is growing. Now, what is the dollar backed by? It's backed by a hell of a lot more than Bitcoin.
Guns.
It is backed by the faith and credit of the biggest
military
tax base with the biggest military. In other words, the world's most eligible borrower. If the U.S. is not the gold standard borrower, who is? Who is better able to pay its debts and to enforce payment that is owed to it? Nobody. Not in the current world and not in the history of humanity. All the dollar is it is a reflection of the faith and credit of the U.S. government, and with all its warts, there is no better creditor. It is not a good creditor. It's a better creditor. Good is not the same as better. So
I think real quick, man.
Yeah.
One, I don't disagree with any of your attributes of money. You were trying to, you never made a case for which one of the attributes that Bitcoin doesn't have. You made the case for why the dollar.
It is not a good
attributes.
medium of exchange. It is not a good unit of account. It is not a good store of value. It is not any of them.
Okay. I would probably argue with those things, but we don't have enough time. The second thing I would say is, I think where people miss on Bitcoin is they assume it's a replacement for the dollar. They don't understand that it is this symbiotic relationship with a toxic dollar whose purchasing power continues to go down, but the system needs that to continue to function. There is no way to get away from it. There is no substitute.
You already know I'm going to debate with that assertion. I don't think its purchasing power is going down at all.
I know. I don't get. You're
and I think that's obvious, by the way.
I know you do. But that appeal to authority doesn't work with me. You're a Paul Krugman guy.
It's not an appeal to authority. It's an appeal to looking at a price chart.
Looking at a chart, right? You're a Paul. I'm one of those guys who prefers like common sense reality. You're a Paul Krugman guy, right? Would you say you follow? Really? Everything I hear you saying seems
we agree on some things. We disagree on others.
When it comes to economics, he's got wild thoughts on lots of different things.
We agree on some things and we disagree on others. I mean, I would call Paul Krugman, I guess, a kind of neo-Keynesian.
Yeah. Yeah.
I don't think I fall there. I don't think I fall into the Austrian kind of doctrinaire school.
Yeah, you're not.
Either.
You're not.
I am what you would call a like for example, I look at the work of somebody like a Milton Friedman and go, well, there's a lot here that makes sense, but there's a lot here that's abject nonsense. So I don't really fit into a mold. I'm a markets person.
Abject nonsense meaning works on paper, painful to try in real life. That's what
doesn't work in real life. Has been shown to fail in real life.
What do you think about what's happening in Argentina right now? Doesn't it feel like Argentina could be a very working model of a lot of Friedman's and Mises, a lot of their theories being put into practice and shown that it can work?
I mean, if you take a basket case economy with currency crises every few years, endless issues with the currency, endless issues with the way that the system is supposed to work, and you have a framework that tells you on Milton's thinking, on the Austrian thinking, start fixing these issues and things will get better. Yeah, okay, sure. Does that mean that if you go to the logical extreme, that's going to be better than a well-functioning system that's not that, like the US system? No. It doesn't tell you that at all. Even a broken clock is right twice a day. You have, and by the way, I don't think the Austrians are completely wrong. Not even a little bit. I think there is insights that Keynesians have. I think there is insights that Austrians have. I don't think that there is ever, not to my knowledge anyway, a system that's been devised out of economics that has actually reflected reality in full. I think all of them have insights. And if you really want to understand how this thing works actually, the best book I think that you could read is from a markets person. Because a markets person is going to tell you, look, blah, blah, blah theory, when XYZ events happen, markets do this in history. And I think the best distillation, I mean, you could go read Dalio, but that stuff is really long and he repeats himself a lot, and it's a tough read. I think if you really wanted to truly understand, go read Mastering the Market Cycle by Howard Marks. And I think that really tells you the real nature of the beast.
Can I ask you this question?
Sure.
Because the chat's going back and forth, and this will go out on. In your mind, has a purchase of Bitcoin 10 years ago until now, has it been a good store of value?
It has been a good store of fiat value in the same way that the buying of any speculative asset, when converted back into the fiat currency medium of exchange, has been a good trade. Has it been a good store of value longer term? No, it's been a good speculative trade.
Well,
and by the way,
I disagree with that. I would say over the long term,
whether it's been a good store of value really depends on when you look at it.
No, because we're at all-time highs, so it doesn't. So my question, here's the core of my question. The core of my question is, when people attack the store of value point, which I think is fair. I think at times it is fair, right? When we were at 20,000 and your high was 70, I couldn't have made the defense I just made because we're at 95. But my point would be, does store of value mean absence of volatility?
No.
Because store of value.
It means lower volatility, predictable volatility.
Because that's subjective. So store of value means at over a period of time that an asset has retained your purchasing power. And I would argue at most points in time that this asset has done it. Now, you also have, 5, 6, 7 periods of 80% drawdowns.
Right.
But I could do the same thing with stocks, right? And it's certain currency crisis. Yeah. So my point is, the store of value point, I think some people confuse volatility of an asset class, short-term volatility, with whether or not an asset is actually serving the function of store of value. And I could, I'll listen to somebody who says that because the vol is so high and your day-to-day volatility, it's not a good store of value relative to this other thing. Okay. But I would then also say, well, if I hold your store of value, if I hold your dollar and do nothing with it, my purchasing power goes down over time, and that's obvious. But if I hold this other thing, I experience volatility over shorter term periods of time and over I'm going to say quote unquote longer term period, because it's only been around since 2007. And that's not really fair to compare it then to gold and to the US dollar, because those time frames are not even in the close to the same ballpark. But over the long term, you have a compelling case not only for the store of value when you normalize or you smooth out vol, but you also have an appreciation of purchasing power over that very same time frame. So to me, I think whenever you have the discussion around store of value, you have to have an agreement. What are we saying here? And are we allowing vol? Are we allowing vol greater than a currency in order to have this discussion or not? And I think that's sort of something you have to normalize in a conversation like this.
I think you're right. And this is where I think this lands. If you want to say that Bitcoin is an asset like any other asset, and then you can weigh it up as an asset, not as a replacement currency, because the artifice you constructed would say, well, the dollar is a horribly flawed, permanently weakening thing as a natural order of the system, and has to be as a natural thing, which I don't think is the case. I think that's plainly incorrect, because currencies can only be valued not in terms of goods. That's not how you value a currency. You value a currency in terms of other currencies.
A trader does that. I think an individual
anybody
citizen
does that.
No, they don't.
As a citizen, you don't value a currency in terms of goods. You value your wages in terms of goods, because the currency is a given. You exist within one legal tender universe.
You're just using fancy words to say the same thing.
I'm not. But for example, wages now are growing at about twice the rate of core PCE inflation. Is purchasing power going down? No, it's going up. Do we still have inflation of about 2%? Yes. But wages are growing faster. So are people losing purchasing power? No, they're gaining it at about twice the speed. But anyway,
they're not.
They are. But let's put that aside for a second. The question, and have they caught up to all of the inflation from before? No, but they will. Let's put that aside. Would you be paid your salary in Bitcoin instead of dollars? I think, logical person would say, if I need to pay my bills every month, and my bills are denominated in legal tender, I can't have the thing that I'm being paid in oscillate like Bitcoin does, because my bill is due on date X, and if the value of my asset, because it's volatile, is insufficient to cover the bill, then it's not a good store of value, because it hasn't survived. With that value,
we've got
I think that's really it.
The producer gave me a note here, so we got to get out of here. And I would love to continue this for 30 more minutes. I know I'm being a little bit snarky, and I shouldn't be. And I appreciate your snark back and this little back and forth we got.
Sure.
We're going to expand this a little bit. There was way more here than I thought there would be. This all started with me going, I wish I could talk to you about Bitcoin. There was way more here than I thought. Ilya, if the people want more
Be careful what you wish for is the lesson there.
Let's take this. This is actually a fun thread to pull on. Let's do this next week. If the people want more from you, Ilya, and I think they're crazy not to want more, where should they go?
So I'm all over the network. Macro Money's 4 days a week, Monday through Thursday. So is Overtime. We're here on Wednesday. Futures Power Hours, Mondays and Fridays. I'm writing for the News and Insights portion of Tastylive.com. I am now on both the formerly Twitter machine and Blue Sky at Ilya Spivak. So go check both of those out. In fact, I need more followers on Blue Sky, so go there. There's a vast disparity between Twitter and Blue Sky now. I am trying to be in as many places as possible. To go completely backwards for no reason whatsoever, I covered my gold short on Monday this week, and I've done nothing since in this market. I will eventually want to be short again.
All right, man. If you want to follow me on Twitter, because I'm a man, and words don't hurt my feelings, you can follow me at Victor Jones. The Owen Jones is here. Because I like to be difficult. All right, everybody. We'll see you back here tomorrow. Same time, same place. Same great network, only on Tastylive. Peace.
Peace.